In project appraisal, there are a few items that need special treatment because of their nature, and a couple of these will be discussed here. The first one is the sunk cost that we will discuss. Primarily, we need to understand what is a sunk cost. As the name goes, it is sunk, it is lost, and something which is sunk is unlikely to be recovered. This is the basic idea behind the sunk cost, because these are the costs that are incurred in past upon which a proposed new investment will be based. So the focus is on the past. It has been incurred in the past, and it is allowing us to come up with some new investment. But the problem is that these costs will not be recovered. They have been incurred, but they cannot be recovered because the future is aimed with the cost and the benefits, while we cannot include the past values in our future analysis, which is the decorum of doing the project analysis. These costs are actually necessary. We have to undertake these expenditures. However poorly advised they may have been. And it doesn't matter that these costs were not made with a focus or with good advice. They can be wrong, they can be lost, because this is the inherent problem with such costs, because these are the costs that are incurred for something which is usually not there, and we are trying to come up with some new thing, and our experiment can fail, or we are trying to gather the data about something that we want to offer in a project, but if the data suggests that there is no demand for that good or service, then definitely the cost that we incurred in the market survey will be wasted, and that becomes the sunk cost. Even if the demand exists, the sunk cost will remain sunk, because in our analysis of the project, we do not include the past values, we start from now. So when we analyze a proposed investment, we consider only the future returns to future costs. So you can see we are focusing on future returns or future benefits and the future costs, not the expenditures in the past or the sunk cost. They do not appear in our accounts. For instance, if we are starting the project from now, it will go on and we will include the B's and C's, whereas the homework that we have done here in the form of sunk cost, which can be market survey, for example, it will not be recovered no matter we go for the project or we don't. There is a very recent example of this. For example, if we are talking about the investment in COVID-19 vaccination, if this happens, we have done some investment in COVID-19 vaccination and the vaccination gets developed, but we find that there are side effects of it. So if there are side effects, the loss of investment will take place and all of it will become the sunk cost. So you see, sunk cost is definitely something we cannot recover, and even if the side effects are absent, still the R&D expenditure, as we call them, research and development, expenditures they are not included in our analysis because the analysis starts from a certain point in time, which is usually now, and then we go ahead. So it depends upon the timeline that we have, and what is that we consider as past and what is that we consider as future. So the sunk cost is not included in our analysis because we are focused on the beginning and the end of the project, and all of it happens from now into the future and not the past. Another item that requires our attention is this item, and it is basically the residual value or the salvage value, and it is incremental in nature. Now let us make sense of it. It is basically a kind of value which is left, because residual is representing whatever is left in a compound, for example, if we talk in terms of chemistry. But here definitely something is left, and it's not necessary to be a chemical. It's definitely some monetary value that we are talking about. So in case of a monetary value in terms of dollars or any other currency, there is some value which is recoverable. Salvage value is again a similar term representing the similar thing, that something is left and has survived, and there is a value that we can attach to it, a dollar value or any other currency value. It is incremental because we are going to take the difference of what is consumed and what is left. Now let's try to read this and make more sense of it. In the last year of the analysis, now let us focus on this thing, that is the last year. The incremental or residual or the terminal value, this is yet another name for this, because it happens when the project is terminating, that is, it is getting completed. So this value is included among the inflows, or in other words, the benefits in the budget, and are credited to the project investment. So it's a kind of credit to the project investment instead of a debit in terms of accounting terminology. So we are going to include them in the inflows or the benefits. We will make sense of it. It's because that we are left with something, and that something can be converted into some monetary units. For example, if we are left with some building or some equipment, some machinery, some vehicles, definitely at the end of the project it is not necessary that all of these things will simply perish and disappear. They are likely to be there, and quite a bit of their capacity of usage would be there. So what to do with this remaining set of material, no matter in which form it is there? The best thing to do is to convert them into their monetary value and consider it as a cost recovery, or as a benefit, or as an inflow. So we can either include them in the benefit side, or we can reduce them from the cost side. But be sure that we are talking about either of these, because if we do both of these, definitely they will be double counting. So it is the matter of or, and it is not the matter of and. Either we can include them on the benefit side, or at the we can reduce them from the cost side. A negative cost means cost recovery, and a positive benefit means increase in benefits in monetary terms in this case. So this is how we treat them. Note that it is the incremental value and not the total value, because the difference of whatever is left of that asset and whatever was the its original value of that asset is considered. So it is the incremental value, not the total value. But for items such as land, livestock, or working capital, there have been many values existing at the end of the project. and only the incremental residual value may be properly credited to the project investment. So here we are taking an example of an agricultural project which is dealing with land and livestock and working capital. In case of an industrial project, we are likely to be left with machines and other advanced equipment and so on. So these are a few things that will not be totally terminated. They will be there to a good extent. Land definitely doesn't get terminated. Livestock, all of it is not likely to be consumed, and working capital will be there as well to a good extent or to a small extent, but we cannot expect them to disappear as soon as the project is completed. So we need to take in account of this residual value by including them on the benefit side or on the deduction on the cost side. The incremental residual value enters the project investment in the final year. So again we are reminded that it's about the final year or the last year, because the project gets completed in the final year, and only then we can have a good idea of whatever is left of those assets. During the project we are not sure, so we wait for the completion of the project and then we analyze the data or observe the assets and try to come up with their incremental residual value. Now we can visualize this thing. For instance, if we have a table in which we have time here, this is the first year, second year, third, and then fourth, and then fifth, and let's assume that the project ends in the fifth year. So there will be benefits and there will be costs. So how to treat this salvage value or the residual value? We should add it in the final year's benefit, or we can subtract it from the cost of the final year. Either of these, I am revising and repeating this thing, that it is to be done in either of these ways, not both of the ways, because in that case there will be double counting. So they come here at the bottom in this analysis, and this is a certain concept, that is discounting. If we do not know much about discounting, we can guess already that this is about reducing the value, because whenever we are talking about discounting, the value is decreasing. In the next topic, we will delve deeper into the psychological reasons of discounting, but right now its name is truly representing what it is. And mathematically speaking, this discounting thing, when it is done over time, it decreases. So as it decreases, as we go in future more and more after this year into that year, its effect will reduce. This is why relatively little weight is allotted to this. It means that discounting will not be substantial, because the more we go into the future, the lesser will be discounting. So we can at least make a brief connection of discounting process. The more the time passes, the lesser discounting we do. So as the last year will contain the residual value, so the discounting will be least, as the time has passed most of it. Now, after understanding this thing, which we will numerically observe as we go into the topics ahead, there are three possible kinds of this residual value. The first one is dealing with the salvage value of the capital assets. Capital assets, they are physical in nature, they include buildings, they include other construction or material or machinery such as irrigation pumps, tractors, or any other machinery from industrial sector. So after the usage and the completion of the project, whatever is left of these capital assets will be included in the project. They are largely consumed by the end of the project. Yes, definitely we use them for the sake of development and the um, you know completion of the project. So they can be consumed over time. For the most part, can be the salvage value will be their scrap value, or it will be a short portion of their normal life expectancy. So how we can guess the salvage value of these capital assets? The simple method is that we can guess their scrap value. We can consult people who are in this business and they can guide us that in the current situation of these capital assets, those machineries and buildings and equipment, what is their scrap value? So that scrap value can be informed by the people in the business of scrapping things, and that value is something that we can use as the salvage value. Or one option could be where we can take a short portion of the normal life expectancy remaining at the end of the project. A small portion of whatever is the value of the overall asset can be considered as the salvage value. Um, in terms of time, we can consider it, or in terms of financial form, we can consider it, because we know the capital assets, they have been consumed to a certain extent, and a portion of it is now left, not the whole of it. So it's another way of judging the salvage value, which definitely is not something that we can do with precision, because when we go to the market, there is no organized market to sell these things in a second hand form. There are usually informal markets, or markets which are formal, but there are no certain price tags. There is more of bargaining and haggling over the price. So these are just estimates, and we can come up with a scrap value, or a short portion of the overall value of the capital assets, just to recover some amount which can be either added in the benefits or deducted from the costs. Another kind of leftover is the residual value of the working capital, and we must remember that the working capital is equal to the current assets minus the current liabilities. So if we deduce the current liabilities from the current assets, we will be left with the working capital. And in accounting convention, we have things like in current assets we have cash, and we have account receivable and inventory. All of these things are current assets, and liabilities definitely are the reverse of it. Something that we have to pay, or something that we owe to someone, will be the current liabilities. Payables, etc. So when we do this deduction, we get the working capital, and as the project gets completed, some of these net values, that is the difference of the current asset and current liabilities, can be left in a positive value, and that can be used as a residual value, and we can include them in our benefits, or deduct them from the costs. So this is another possibility. In addition to the capital assets, we can have some leftover working capital. And finally, the third thing that we have is the residual value of the items that have a substantial useful life remaining at the end of the project. So some of the things might be left with more of their value, and are not that much depreciable at the capital assets were, as we saw in the first point. These things are able to survive by their very nature, or they have the ability of getting replenished For example, we talk about livestock herd. They reproduce, and definitely the number of cattle can increase in addition to getting consumed or slaughtered. They can be reproduced, and definitely quite a bit of them will can be left at the end of the project. Irrigation or drainage, we do it for land and for the crops. So this is something again which is not likely to be depleted immensely, because land is not a destructible asset, um, and the fixtures on it, for example tube well, etc., they are also very much long lasting and are not used as capital assets, in which there is a frictional process of the machines, and the depreciation happens quite a bit. So this environment of agricultural sector usually gives us substantial useful life of these assets at the end of the project. So we should address them, we should include them in our benefits, or we can deduct them from the costs. So we can say that we can now handle the two specific items in our project appraisal. That is the sunk cost. It is usually skipped and is not included, as it is something in the past and not in the future, and the project exists in future. And when it comes to residual value, salvage value, we include it, we add it either in the benefits, or we can deduct it from the costs. We avoid the double counting, so that um, something wrong in the calculations doesn't happen, and we include it once only. And these are the three possibilities of such values that we can include in various situations, like in case of capital assets, in case of working capital, and in case of things that are left with quite a bit of substantial useful life. All of them are included in benefits or deducted from the costs, regardless of their magnitude. Thank you.